What's up guys, Zoeb here from OneGlanceTrader.com, and I'm really excited to be sharing with you my two-part series on everything to do with Confluence trading. Now for those of you who follow my channel, you guys will know how much I talk about Confluence trading, and I never really put any videos together on my channel to really hone in on this subject, and that's what I wanted to do as part of this two-part series. So just to give you a quick overview of what we're going to cover. So in this video, we're going to go through what Confluence trading is and, my kind of cheat sheet on the top trading techniques and analysis that I use when, coming up with trade entries. And then what we're going to do is we're going to look at a step-by-step example of, a very similar trading strategy that I've taught on this channel, and then look for confluence factors to see whether or not we should be taking that trade. And then in the second part, I'm going to be sharing with you something that, I listened to on a podcast or some trader podcast around a year ago, and I've never really implemented any of these kind of strategies until the last 4 to 5 months. And it has really made my trading more efficient and more profitable just by using Confluence with risk management. Now, I don't want to go into any of the detail in this video, and we'll save that for part two. And part two has already been uploaded to YouTube, so you can watch it straight after this one. So let's get straight into part one. The first thing we're going to look at is what is confluence trading. So confluence trading, according to Baby Pips, is when you combine more than one trading technique or analysis to increase your odds of a winning trade. Now that could be a number of technical indicators put together, or that could be fundamental elements, or that could be a combination of both fundamental and technical. So you're not relying on one entry signal to say, yes, now is the time to buy, now's the time to sell. You're looking at multiple things. And that's exactly what I look at every time I'm about to press the button to buy or sell. I'm looking at a combination of factors that are telling me a story of whether price is potentially going to move in an upward trend or a downward trend or ranging. And based on all those factors, it then tells me whether I feel that I should be pulling the trigger or not. And this is exactly what I'm going to kind of walk you through now. So I'm going to take you inside my brain and walk you through the kind of key things that I look at when deciding whether or not to take a trade or not. So I'm going to just quickly walk through them, and then what we're going to do, we're going to put some of these to the test in a real life trade example, and we're going to look at to see if we can build a picture of whether or not our trade entry is a sufficient trade entry or not. So the first thing that I like to look for, and is the core element of most of my trading strategies, is divergence. So you guys know that I talk about regular and hidden divergence a lot on my channel, and the first thing I look for is there divergence involved, because that's one of the key fundamental core elements of my trading strategy. There has to be some form of divergence. Whether I'm counter trending or trend trading, there has to be divergence. If there's no divergence, I won't take the trade. So that's kind of the baseline. The next thing I kind of look at is candlestick pattern. So I'm known for my OGT price action indicator, which has 5 or 6 built-in candlestick patterns that produce alerts on the chart. And if I'm looking at divergence, for example, if I see a hidden divergence inside an uptrend, which potentially is a trend continuation pattern to continue to go long in the market, and I see a bullish pin bar form on a pullback, that there gives me another layer of confirmation that price potentially is going to go and continue to the upside. The next thing that I like to look at is significant levels. So this could be round number levels, key support and resistance levels, whatever it may be. If I'm thinking of entering on divergence, but it happens on a significant level, that will impact my decision whether or not to continue with that trade or to not continue with that trade. Moving averages, we all know that banks love using moving averages as potential support and resistance areas. So having those on your chart as another layer of confirmation, again, will help you on deciding whether or not to take the trade. Higher time frame analysis. We all hear and all the gurus talking about multiple time frame analysis, and you know, trading in the long-term direction of the trade. So you could be trading a counter trend strategy on the 5-minute chart, but on the 15 and 30-minute chart, we could be inside a bullish trend. So if you're doing a bearish counter trend trade, and the higher time frames are aligning with that, therefore you're actually going with the longer term trend. So this is where counter trend strategies do work if you're trading in the direction of the long term trend. So very, very important that you use that analysis as part of your overall thought process. And price overextended, when oscillators become overbought or oversold, these are these are areas now that we need to start thinking about whether or not, if we're trend trading in prices, overbought on the RSI, to the upside, do we really want to be getting into that trend now, or do we want to wait for a pullback? Because that potentially could also be a reversal. So those are the main things. There's other things, looking at other oscillators like stochastic, CCI, using fib levels. And again, these are what I personally use in my trading. You guys will look at all sorts of indicators and fundamentals, etc., etc. So take these elements, combine them with your own and start building a little crib sheet that you guys can, print out, keep on your desk, keep in a Google Sheet that, if your trading strategy says enter long here, look at all these different areas over here, and see whether or not it goes with your thinking, or because it can potentially save you a lot of money. And that's the bit that I want to try to hone in. This hone thing is, I know we talked about in baby pips that in the previous slide we looked at, to increase your chance of a winning position. But what it also does is gives you an opportunity to say, actually, I'm going to pass on this trade, because preservation of capital is important, and we'll go a lot into detail on that in part 2. So we'll talk about that later. So here are some examples again that I potentially run through when I looked to hit the button. So what we're going to do, we're going to go look at a trading example here, and I'm really excited to kind of walk you guys through it, because I think it simplifies everything when you guys actually see a visual example. So let's just say that my trading strategy is a regular divergence, and my entry signal is a MACD crossover after I find the divergence. So we can see on this chart over here, I'm on the Euro USD 1 hour chart, and we've got classic regular bearish divergence. So price is making higher highs and the oscillator is making lower highs. And as you can see here, the MACD has just crossed over to the downside. As you can see there, the histogram is shown its first kind of bearish histogram bar. Normally, in all circumstances, I would place a short here, put my stop above the highs, and probably do a 1 to 2 reward to risk ratio here. So that would be my trading strategy, as what I would normally do. Now, what we're going to go through is there any evidence to support my logic, my trading plan, my trading strategy, that price will continue to go short here? Because price could easily, this could just be a retracement and then pull up and start making higher highs, which is, again, I'll get stopped out and I'll lose the trade, and then I'll move on to the next one. But what can we do to increase those probabilities that this is going to be a winning trade? So the first one is significant levels, and now I talked about that in the other slide in my cheat sheet, is that we know that price tends to react at significant levels, whether that is strong support and resistance levels or round number levels. Now I've talked about the round numbers indicator on my channel before. I'll link to that in the top right hand corner, or you can find the link to that video below on about how you can use the indicator and where you can download it for. It's a free indicator. It's not my indicator, but I'll link to all of that inside the description. And you can see here that price is at a significant 0-0 level, which is a psychological level for traders. Even institutional retail traders put in their stops and their take take profits at these kind of psychological levels. So price tends to react at these levels. And as you can see here on the chart, that price tried to break through, but didn't, and started now to retrace, and it got used as a form of resistance. So again, adding that to my divergence, that gives me another layer of confidence, you could say, that price will at least continue to go short in the short term. So that's one area that is inside my favor, which is great to see. The second thing is again, I'm known for this channel using my OGT price action indicator, and I'll link to it in the bottom or in the top right corner, so you guys can get to learn more if you're new about this. But one of the patterns as part of my indicator is the inside bar, and this snowflake is the symbol that's used if an inside bar is created. And you can see here that this red bar where the snowflake is symbol is on top of, the whole range of the candle is inside the previous candle, or the mother candle as it's called. And what that candle is an indecision candle. And generally when you get an inside bar, you normally draw two lines at the high and at the low, and you wait for price to kind of break out at the high and the low. And if it breaks up to the upside, it will continue to go higher, and to the downside, it will look to start a reversal. And as you can see there, that it has shown us an inside bar, and it's broken the low of that inside bar and continuing to go down. Again, another layer of confirmation and confidence that price will continue to go down. And this is how you can use one of my indicators to do that. Another example is a price overextended. Again, using another one of my indicators, the OGT RSI MDF indicator. And what this indicator does is that it tells you when the RSI is overbought or oversold on multiple time frames. So if the RSI is overbought or oversold on multiple time frames, it gives us a high level of confidence or an early warning system that price may reverse or retrace. And in this example here, what you can see is that you've got two red arrows on these two bars, and what it's saying here is that price is overbought, or the RSI is overbought, i.e. above 70 on the RSI on multiple time frames. And in this example, it's on the current time frame, i.e. the 1 hour, and one time frame above, which is the 4 hour. So the 1 hour and the 4 hour were oversold in this within these two sections over here. So that again gives us another clear indication that price is overextended and will want to come back and mean revert back to its mean. So again, giving us another indication that potentially that price may reverse or at least retrace. And then the next thing is higher time frame analysis. Again, I've got another one of these indicators, OGT trend dashboard indicator, one of my latest indicators. And what this indicator does, it tells you on any pair on any time frame whether a currency pair is ranging, uptrending or downtrending using a set of 3 moving averages. And when I talk about higher time frame analysis, is I only look at 2 time frames higher than my current trading chart, because I see a lot of people who are trading the 5-minute chart and looking at the daily chart to make sure they're going with a long-term trend. That to me just sounds ludicrous. If you're looking at higher time frame analysis, you need to be relevant to your current trading chart. So whenever I look at it, I only look at 2 time frames higher. So for me, if I'm trading the 1 hour, it would be the daily chart. So the 4 hour and the daily, 2 time frames above the 1 hourly. So as you can see here, the 1 hour is currently in an uptrend, which you can clearly see from the left hand side over here. We are in an uptrend. But the daily time frame is actually inside a downtrend, which again gives us a view of, this on the 1 hour chart, this is a mean reverting trade, a counter trend trade, where on the daily chart you could argue it's a trend trade going with the long-term trend. So again, gives us another indication that price will continue to fall. So just to summarize it all, there are 5 things here that are going inside our favor. We've got regular bullish divergence, prices making higher highs, the oscillator, the MACD, is making lower highs. We've got price at a significant round number at 1.100. We've got a bearish price action candlestick in the form of an indecision candle of an inside bar, which has been broken on its low. We got the RSI overbought on multiple time frames, and also the daily chart is also in a bearish trend as well. So with all that putting together, it gave me a huge amount of confidence to place a sell order on this trade. And as you can see, the actual outcome is that this resulted in a 200 pip move. Now, I'm not saying that we're going to capture all 200 pips. This might have been a 1-to-1 or 1-to-2 trade, whatever it may have been. It would have been a winning trade. So again, this is just an example of how powerful Confluence trading actually is, and I really hope that you will apply some of these concepts. And I'm more than happy to take any questions you've got on any of the concepts I just outlined, or any new ones on there. I was really tempted to put fib levels on here, but for me, I'll be honest, I don't trade fib levels that often, so I didn't really want to tell you something that I use, but I don't actually use it that often. But everything I've shown on that list is what I use every single day. When I see a notification come on my iPhone on MT4 saying to go long or go short, I will head over to the charts and apply all those kind of different elements, and it will tell me whether or not I should or shouldn't be taking the trade. So like I said, I really hope you gained some value from the video. You should see the thumbnail now for part 2, where we talk about Confluence and risk management. Click on that thumbnail now, and I shall see you in a few seconds.